Hello, today our topic is the balance sheet. If you want to know more about the balance sheet, stay with me. But wait, if you are new to my channel, please give me a like, subscribe and leave a comment. Are you ready? Let's begin. What's a balance sheet? A balance sheet states a business assets, liabilities and shareholders' equity at a specific point in time. It offers a snapshot of what your business owns and what it owes, as well as the amount invested by its owners, reported on a single day. Balance sheet is sometimes referred to as a statement of financial position. Elements of the balance sheet: assets, probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or events. Liabilities, probable future sacrifices of economic benefits arising from present obligations of a particular entity to transfer assets or provide services to other entities in the future as a result of past transactions or events. Equity, residual interest in the assets of an entity that remains after deducting its liabilities. In a business enterprise, the equity is the ownership interest. The balance sheet consists of these elements: assets, current assets, long-term investments, property, plant and equipment, intangible assets, other assets. And on the other hand, we have liabilities and owner's equity. We have current liabilities, long-term debt, owners or stockholders' equity. Current assets: cash and other assets of a company expects to convert into cash, sell or consume either in 1 year or in the operating cycle, whichever is longer. Current assets have these items: cash and cash equivalents. The basis of valuation is fair value. Short-term investments, generally fair value. Receivables, estimated amount collectible. Inventories, lowers of cost or market. Prepaid expenses, at cost. Cash, generally any monies available on demand. Cash equivalents, short-term highly liquid investments that mature within 3 months or less. Restrictions or commitments must be disclosed. Short-term investments. Companies group investments in debt or equity securities into 3 separate portfolios for valuation and reporting purposes. Held to maturity. Debt securities that a company has the positive intent and ability to hold to maturity. It's classified as a current or non-current. Trading. Debt and equity securities bought and held primarily for sale in the near term to generate income on short-term price differences. It's classified as a current. Available for sale. Debt and equity securities not classified as held to maturity or trading securities. It's classified as a current or non-current. Receivables. Major categories of receivables should be shown in the balance sheet or the related notes. A company should clearly identify anticipated loss due to uncollectibles, amount and nature of any non-trade receivables, receivables used as collateral. Inventories. To present inventories properly, a company discloses the basis of valuation, for example, lower of cost or market, and the cost flow assumption used, for example, FIFO or LIFO. Prepaid expenses. Payment of cash that is recorded as an asset because service or benefit will be received in the future. In the summary, current assets are cash and other assets a company expects to convert into cash, sell or consume either in 1 year or in the operating cycle, whichever is longer. Let's move to the first example. Harding Corporation has the following accounts included in its December 31, 2021 trial balance, and the instruction is prepare the current assets section of the balance sheet. The first account, we have accounts receivable, $110,000. It's in a current assets section. Inventory also. Allowance for doubtful accounts. It's a contra account. It must be deducted from accounts receivable. Patents. It's an intangible asset. Prepaid insurance in the current assets. Accounts payable in the current liabilities. And finally, cash in current assets. Now we have to sum all of these numbers. Let's move on to non-current assets. Here we will see more than one category. Long-term investments, securities, bonds, common stock, or long-term notes. Tangible fixed assets not currently used in operations. Land held for speculation. Special funds, sinking fund, pension fund, plant expansion fund, or cash surrender value of life insurance. Non-consolidated subsidiaries or affiliated companies. Included in Outcast Companies December 31, 2021 trial balance are the following accounts, and the instruction is: prepare the long-term investments section of the balance sheet. Prepaid rent in the current assets. Debt investments long-term. Unearned fees in the current assets. Land held for investment. Notes receivable long-term. And the total is $137,000. Property, plant, and equipment. Tangible long-lived assets used in the regular operations of the business. Physical property such as land, buildings, machinery, furniture, tools, and wasting resources, minerals. With the exception of land, a company either depreciates, for example buildings, or depletes, for example oil reserves, these assets. For example, Lower Company's December 31, 2021 trial balance includes the following accounts, and the instruction: prepare the property, plant, and equipment section of the balance sheet. Here we have inventory in the current assets, buildings in the property, plant, and equipment, land in the property, plant, and equipment. Equipment, we have to put it in the property, plant, and equipment. Land held for investment. It's a long-term investment. Accumulated depreciation buildings. It's a contra account. It will be deducted from the buildings. Accumulated depreciation equipment also. Timberland in the property, plant, and equipment. And the total is $474,000. Intangible assets lack physical substance and are not financial instruments. Limited life intangibles amortized. Indefinite life intangibles tested for impairment. For example, Patrick Corporation's adjusted trial balance contained the following asset accounts at December 31, 2021, and the instruction is: prepare the intangible assets section of the balance sheet. We have prepaid rent, it's a current asset. Goodwill in the intangible assets. Franchise fee receivable in the current assets. Franchises, intangible assets. Patent, also intangible asset. Trademark, also. And the total is $140,000. Other assets. This section should include only unusual items sufficiently different from assets in the other categories, like prepaid pension costs, deferred income tax. Let's move to the liabilities. Liabilities. Companies classify liabilities as current or long-term. Current liabilities. Obligations that a company reasonably expects to liquidate either through the use of current assets or the creation of other current liabilities. For example, Thomas Corporation's adjusted trial balance contained the following liability accounts at December 31, 2021, and the instruction is prepare the current liabilities section of the balance sheet. We have bonds payable due in 3 years. It's non-current. Accounts payable, the current liabilities. Notes payable due in 90 days. It's a current. Salaries and wages payable. It's a current. Income tax payable. And the total is $105,500. Long-term liabilities. Obligations that a company does not reasonably expect to liquidate within the normal operating cycle. All covenants and restrictions must be disclosed. For example, included in Adams Company December 31, 2021 trial balance are the following accounts, and the instruction is prepare the long-term liabilities section of the balance sheet. We have accounts payable, it's in current liabilities. Pension liability, in the long-term liabilities. Discount on bonds payable, it's a contra account. It will be deducted from bonds payable. We have unearned rent revenue. It's in current liabilities. Bonds payable in the long-term liabilities. Salaries and wages payable. In the current. Interest payable, also current. Income tax payable, also current. The total long-term liabilities, $746,000. Owner's equity. Companies usually divide the section into 6 parts. Capital stock, the par or stated value of the shares issued. Additional paid in capital, the excess of amounts paid in over the par or stated value. Retained earnings, the corporation's undistributed earnings. Accumulated other comprehensive income, the aggregate amount of the other comprehensive income items. Treasury stock, generally the amount of ordinary shares repurchased. Non-controlling interest, a portion of the equity of subsidiaries not wholly owned by the reporting company. We have, for example, Hawthorne Corporation adjusted trial balance contained the following accounts at December 31, 2021. And the instruction is prepare the stockholders' equity section of the balance sheet. We have retained earnings, common stock, bonds payable, non-current liabilities, paid in capital in excess of par common stock, goodwill, intangible asset, accumulated other comprehensive loss, we can deduct it, non-controlling interest, we can put it here, we can see here $950,000 plus $120,000 minus $150,000 equal $920,000. It's stockholders' equity for Hawthorne Corporation. Plus non-controlling interest, $35,000. And the total stockholders' equity is $955,000. Let's move to the example. Here we have the trial balance of Scott Butler Corporation at December 31, 2014, and the instructions are prepare a balance sheet at December 31, 2014 for Scott Butler Corporation. Ignore income taxes. The balance sheet will look like this. We will put all of its sections. Assets, current assets, long-term investments, property, plant and equipment, intangible assets, liabilities, current liabilities, long-term debt, stockholders' equity, and then we will arrange the accounts like the following. The first account is cash, and it has a debt balance of $197,000. It will be transferred to the current assets section of the balance sheet. Sales revenue $8,100,000. It's an income statement account. In order to focus on our topic, we'll exclude all income statement accounts and only review balance sheet ones. You can watch an income statement video if you like to know more. Debt investments trading at cost $145,000 and its balance is $153,000. The account balance represents the fair value, so we will take it. Because the investments are trading, the account will be transferred to the current assets. Debt investments, long term, $299,000 to the long-term investments. Equity investments, long term, $277,000 to the long-term investments. Notes payable, short term, $90,000 to the current liabilities. Accounts payable, $455,000 to the current liabilities. Land, $260,000 to property, plant, and equipment. Buildings, $1,040,000 to the property, plant, and equipment also. Dividends payable, $136,000 to the current liabilities. Accrued liabilities, $96,000 to the current liabilities. Accounts receivable, $435,000 to the current assets. Accumulated depreciation buildings, $152,000. It's a contra account. It's subtracted from the buildings in the property, plant, and equipment section. Allowance for doubtful accounts, $25,000. It's also a contra account. It's subtracted from the accounts receivable in the current assets. Inventory, $597,000 to the current assets. Notes payable, long term, $900,000 to the long-term debt. Bonds payable, $1 million, also to the long-term debt. Equipment, $600,000 to the property, plant, and equipment. Accumulated depreciation equipment, $60,000. A contra account subtracted from the equipment. Franchises, $160,000 to the intangible assets. Patents, $195,000 also to the intangible assets. Common stock, $5 par, $1,000,000 to the stockholders' equity underpaid in capital. Treasury stock, $191,000 is a contra equity account recorded in the stockholders' equity section of the balance sheet. Retained earnings, $78,000. This number does not indicate the actual balance. We have to calculate it after calculating the sum of all assets, liabilities, and equity. Paid in capital in excess of par, $80,000. This number is added to the common stock as additional paid in capital. And now let's calculate the totals and then calculate the retained earnings. This is all for today. See you in the next video.